So, welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. We will be discussing technicals with fundamentals. I would be noting the main event of the day would be the inauguration of US President-elect Donald Trump. Now, the big issue about the inauguration of President Trump, I think it's marking the return in 4 more years of uncertainty in the markets, or at least I would say that the main interest of the markets tends to revolve around his speech. Now, before we get into that, let me note here that President Trump, it's his second term. And I'm not just saying that, it's something which tends to highlight the possibility that Donald Trump will be entering the White House with a renewed confidence, which may lead him to have or take more extreme choices. So we may see his moves being even bolder and more intense, which could create increased market volatility over the coming 4 years. It's characteristic how he had been discussing in the past few months the possibility of practically reasserting control over the Panama Canal. He also expressed the idea of buying Greenland, or he threw the idea that Canada could become another state of the US. So that tends to highlight an expansionary policy regarding the Ministry of States. I would be also noting here that similar tendencies are included also for the internal political scene of the US. So mayhem in the big picture is expected to occur over the next 4 years. That's one. The second issue would be of interest would be practically today the speech. Why? Because President Trump loves publicity, loves to be in the center of attention. And definitely the inauguration speech is such a possibility right now. I wouldn't be surprised to see him including in the inauguration speech some comments which will be most probably market moving and will be catching the headlines and the attention of media, international media. And the question is, what topics will he refer to? I would expect the first topic to be the possible tariffs on US imports from Canada, the EU, Mexico, and China. He has already mentioned his intentions for that. And I wouldn't be surprised to see him mentioning also immigration issue of the US. So overall, should he favor a deregulation, or if you prefer, further regulation of the crypto market, we may see cryptos getting some support. The same applies also for US stock markets. Should he mention a possibility of deregulating ordinary markets and the stock markets, that could support US stock markets. I would be noting also that the possibility of him mentioning tariffs could provide some support for the US dollar, as it would be reinforcing greenback's dominance in the FX market. On the other hand, the comments could weigh on gold's price unless we see safe haven inflows coming to the shiny metals rescue. So stakes are high, uncertainty is high, so we may see the event actually having a market moving effect. However, that remains to be seen in today's American session. On a technical level, we're starting with Euro USD. You can see how the pair last week bounced on the 1.0220. Actually, it failed to clearly break it and stabilized between the S1 and the R1. We maintain a bearish outlook, and we're basing this bearish outlook practically on the downward trend line, which has been guiding the pair lower since the 25th, since the 30th of September. You can see it right here. At the same time, please note how the median of the Bollinger Bands, which is also the 20 moving average, is pointing clearly downwards, as is also the 50 moving average, the orange line, as well as the 100 moving average. So everything is pointing downwards. On the other hand, you can see the RSI indicator is still below the reading of 50, has corrected a bit higher, which may be a little bit disappointing for the bears. It's not as if the bearish sentiment has been eradicated, yet it has considerably eased. So we may see the pair for the time being remaining in a sideways motion bias, but the bearish predisposition is still there as long as the downward trendline remains intact. Should the bears maintain control over the pair, over EURUSD, we may see it breaching the 1.0220 and start aiming for the 1.0095 or the 1.0100. On the flip side, for bullish outlook, the bar is high. The pair would have to breach the 1.0385 resistance line, breach also the prementioned downward trend line in the first signal that the downward motion has been interrupted, and start actively aiming for the R2 1.0530. For the time being, such a scenario seems to be quite remote. Let's have a look at USD JPY. There you go. USD JPY, which practically bounced on the 155.35. In my opinion, the movement, you can see it right here, forces us to lower the S1 just a bit. It's a tad bit, but still. And we're bringing it to 155. Let's lock it in. Practically lowering the S1 by 35 pips. The inability of the price action to clearly break the S1, and actually it bounced on Friday on it, in my opinion, tends to verify the sideways motion of the pair between the R1 and the S1. We're talking about a range of 335 pips from the S151 to the R158.35. Now, JPY traders are expected to clearly focus on BOJ's interest rate decision, but also Japan's CPI rates for December. Should we see a hawkish stance on behalf of BOJ, possibly a rate hike, which is quite well anticipated right now, we may see JPY getting some support, especially if BOJ maintains a hawkish tone about future rate hikes to come. So in BOJ's interest rate decision, it's not about the rate hike as such, but it's also whether the bank will be signaling more rate hikes to come. Should we see JPY strengthening, we may see USD JPY breaching the S155 and start aiming for the S251.30. On the flip side, should the US dollar gain over the coming week, given Trump's inauguration, we may see USD JPY rising, breaching the R158.35 and start aiming for the R262. Let's have a look at GBP USD. GBP USD, which maintains a clear-cut downward trend line, it even intensified. It has breached temporarily the 1.22. We definitely are going to be reversing that into a resistance line, and let's go hunting for a new ultimate support line, unlocking the chart, going back. Here you go. A little bit further back. Now that's the picture. Lowering it. I'm keeping this true here as a bearish target in green. It's a bit narrow, but still at 1.18 maybe. Let's check it with the 1 hour chart. Going back, if it allows us to go that back. If not, we're going to be adding more. No, let's move with the 4 hour chart. Readjusting, unlocking. Going back, going back, going back. We have a confirmation of the S1. Another confirmation of the S1. And here we have a confirmation of the S3. Okay, it sticks. Let's readjust. Back to the daily chart. Locking it in. Let's correct the labels. Reversing the S3 to 1.18. The S2 at 1.1925. The S1 at 1.2065. The R1 at 1.22. The R2 at 1.2375. And the R3 at 1.2515. Definitely there is a downward motion here, and we tend to maintain the bearish outlook, but I would be noting that the RSI indicator has dropped pretty low. It's at 31, which may be implying that cable is nearing oversold levels and maybe ripe for a correction higher. But as long as the downward trend line remains intact, we maintain our bearish outlook. Should the pair correct higher, we may see it breaching the 1.22 and actually breaching also the R2 1.2375. It has enough space to do that. On the flip side, should the bears maintain control, I would expect the pair to start aiming actively for the S1 1.2065. Okay, let's move now to use the cat. USD CAD, which is currently testing the 1.4465. It's just at the end of it. The upward trend line remains intact. You can see it's starting here, being touched again and again. So it's being verified a couple of times. On the other hand, you can see how the price action of USD CAD maintained a sideways motion over the past month. So let's have a look at how many days this actually is. Since the 18th of December, so yes, we're talking about 1 month. Now, the upward motion of Thursday and Friday was somewhat decisive, and they're threatening right now the R1 1.4465. Should the USD gain further confidence and move higher, then we may see USD CAD actually breaching clearly the 1.4465 and starting to aim for the 1.4590, maybe even higher. On the flip side, should the pair stabilize, I would expect it to remain within the boundaries between the S1 and the R1. A bearish outlook for the time being seems remote. For the adoption of the bearish outlook, I would require the pair to drop, breach initially the pre-mentioned upward trend line in the first signal that the upward motion has been interrupted, and continue lower to breach the S1 1.4335 and start aiming, if not even breaching, the 1.4220 support level, the S2. Let's have a look at AUD USD. So AUD USD seems to be hitting the floor at the 0.6160 support line. On the other hand, it hit a ceiling on Wednesday at the 0.6245 resistance line, but the downward trend line is being maintained. So we tend to maintain also a bearish outlook for the pair. For the bearish outlook to be expressed, we would require the pair to breach the S1 0.6160 and start aiming 105 pips lower, the S2 0.6055. I would be noting here that the RSI indicator has corrected higher. It's still between the readings of 30 and 50. It's actually at 41, which may imply an easing of the bearish sentiment, yet the bearish predisposition of the market for the pair seems to be maintained. So we see the case for the bearish outlook to be more possible than anything else. On the other hand, though, should the pair fail to breach the 0.6160 and start aiming for the S2, 0.6055, which would be consisting of bearish outlook, then we may see it breaching the pre-mentioned downward trend line, yet respecting the S1 and the R1. In such a case, a sideways motion bias would be prevailing. A bullish outlook seems to be a little bit remote right now. For that to happen, we would require the pair to breach the pre-mentioned downward trend line, signaling the interruption of the downward motion, but also breach the R1 0.6245 and start aiming for the R2, maybe even reach the R2 0.6345, and that would be marking a big V formation which could be in the works. But for the time being, we maintain a bearish outlook given that the downward trend line remains intact. Once again, though, the S1 has to be broken for the bearish outlook to be maintained. The price action has to form a lower true than this one, so it has to breach the S1 and start actively aiming for the S2. Let's have a look at WTI price. Okay, we are going to be needing some reshuffling here. And definitely we're going to be relocating the S1, which is now to be turned into the first resistance line, as it's going to be marking Wednesday's peak at 79.25. It's as if WTI prices have hit a ceiling at this level, with the R2 now being set at 83.85. The R3 at 89.45. And let's have a look at the support lines. Starting with the S1 at 72.10. Now the first support line draws his attention practically from the fact that the price action of the commodity has peaked here and used to be a former resistance line. Given that the price action now is above it, has been turned into a support line. The S2, it's at 66.45. And the S3 at 61.45. Now you can see how the price action of gold has corrected lower since Wednesday, actually on Thursday and Friday. One of the reasons could be also the ceasefire agreement between Israel and Hamas in Palestine, which tended to ease somewhat the market worries about the international supply lines of oil. It's understandable, but we tend to view the agreement as being temporary. And actually, I wouldn't be surprised to see violence erupting once again within the next couple of months, maybe even earlier. Now, on a technical level, the fact that the price action has corrected lower after the R1, after hitting on the R1, it's just that. It's a mere correction lower. It's not a change of trend. The upward trend line, which had been initiated practically since here, which is the 27th of December, remains intact. The bullish sentiment has eased, has corrected below the reading of 70. It's now at 64. So on the one hand, we have a correction lower, but the bullish predisposition of the market is still there, and the upward trend remains intact. For a change of trend, we would require a clear break of the prementioned upward trend line. Should the bulls regain control over oil prices, we would expect it to breach the 79.25. And I'm mentioning this because for a bullish outlook to be maintained, we need a higher peak than this one. So the price action has to rise, breach the R1, and start aiming for the R2 83.85. On the flip side, should the bears take over, we may see the price action of WTI breaching the 72.10, and that would be marking the downward trend line. Why? Because we would be breaking the prementioned upward trend lines, signaling exactly the interruption of the upward motion, but also no wish for stabilization, as it would be breaching below the S1 72.10. Next possible target for the bears is being set at 66.45. I'm noting that the S1 could be adjusting by a bit. One could raise it as high as this level here. Note this 1, 2, 3, 4, 5 days where practically this level was used. That would be the 72.30 was used as a support line. So yes, why not? Let's upgrade it by 20 cents. But that's not the main issue here. The main issue is that for the time being, oil prices are correcting lower, but we maintain a bullish outlook. Let's have a look at gold's price. Okay, in an intense upward motion, and we definitely have to shift the upward trend line to the right. There was a false break here, and the 2665 resistance line has to be turned into a support line, given that the price action is above it. I'm a happy analyst in the sense that the price action has hit on the 2725 resistance line and has verified it. And we're setting the 2860 as the next ultimate possible target for the bulls. Let's correct also the labels, starting with the R3 at 2860, the R2 at 2790, the R1 at 2725, the S1 at 2665, the S2 at 2585, and the S3 50 pips, sorry, $50 lower at 2535. So we tend to maintain a bullish outlook for gold's price, and we're basing this practically on two elements. The first element would be definitely the upward trend line, which has been guiding the precious metals price higher, in my opinion, since the 19th of December, for over the past month. You can see that the bullish tendencies were initially expressed here, but intensified from the 31st of December onwards. The RSI indicator is the second element which supports the bullish outlook, given that it remains at 59, which is not very high, but it shows a bullish predisposition of market participants for the pair. So, should the bulls maintain control, we would require a higher peak than this one. So the price action has to breach above the R1, 2725, and start aiming for the 2790, which is practically a record high level for the precious metal. On the flip side, should the bears take over, I would expect the price action to breach the pre-mentioned upward trend line in the first signal that the upward motion has been interrupted. But I would also require it to breach the 2665 and start aiming for the 2585. A possible stabilization should occur if the price action of gold breaks the pre-mentioned upward trend line, yet at the same time respects the R1 2725 and the S1 2665. That would imply a sideways motion like this, allowing traders practically to start selling once the price action of gold has neared or reached the R1, and buy when the price action hits or reaches or nears the S1. Yeah, at this point, I would also like to see a few American US stock market indices. I'm starting with S&P 500. We're going to be working our way up from the scratch, and we have R1 and S1. You can see how the price action has been moving in a sideways channel between the pre-mentioned levels. And the first would be the S1 at 5,780. At the end of last week, we can see how the index's price action has verified this level as a support line. While on the flip side, to the upside, I would be noting the 6,100 as a resistance line. So we have a sideways movement which has been dominating the index for over 2 months, actually since the early days of November, since the 5th, 6th of November. On the other hand, there was an upward trend line. Yeah, that was true. If we drill into the weekly chart, it becomes more obvious. Allow me to draw it from around the 25th of October 2023, moving upwards. There was a false break here. Back to the daily chart. It's putting some pressure to the upside. But for the time being, I don't think that's the key point. The sideways motion between the levels seems to be prevailing. So I'm going to be maintaining a sideways movement bias for now. On the other hand, the upward trend line and the RSI indicator, which is at 55.8, tend to imply that a slight bullish warning should be issued. So there is a case that we see a new record high within the week. It's going to be interesting how Trump's inauguration speech is going to be affecting US stock markets. Also, do not forget that on a fundamental level for US stock markets, we have the earnings season, which could create headlines at any given moment regarding a company. Let's have a look at NASDAQ. A similar sideways motion, albeit with the characteristic that it narrows. At 21,500, we have our first support line, so a resistance line. And the first support line is at 21,475. Could go lower. Let's try 70. Yeah, you can see a nice touch here. I'm testing here. Let's have a look also at the R1, 21,500. So for the time being, we tend to maintain a bias for the sideways motion of the index. That's in the very short term over the European morning today. If we drill into the daily chart, that should provide us with a clearer picture. That's it. If we clear all the resistance support lines, get the confusion out, one thing prevails, and that's the fact that the price action of NASDAQ has breached the downward trend line, which has been guiding the index lower. So the question is, how low can it get? That should mark the first support line. On the flip side, how high it could get, that should mark the first resistance line. Yet, I would be also noting this peak here. Once again, for the time being, the bearish movement of Nasdaq has been interrupted, and that has happened practically on Friday, yet it was verified also today. Sideways motion has started to prevail in my opinion. Okay, that should sum it up from all of us here at IronFX. Best wishes for solid trading.
In progress. Okay, hi everyone, and welcome to today's webinar. So for today's session, we are going to be talking about price action. We're going to give about 1 more minute to let more people join the session before we get started. So in the meantime, let me know in the chat if you guys can see me and hear me, and can see my slides as well. And then we'll begin in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're going to start off by talking about the anatomy of a candlestick, some price action trading approaches, and then we'll look at the different candlestick patterns. And then lastly, we'll combine candlestick patterns with what we already know, such as your support and resistance, your Ichimoku, and some other indicators as well. If you guys have any questions throughout the webinar, feel free to let me know in the chat, and I'll try my best to answer all of them. Okay, let's go ahead and get started with the anatomy of a candlestick. So here's we have a bullish and a bearish candlestick. On the left, we have, so basically the tip of the bullish candle is the high price, and the close price starts when at the start of the body of the candlestick. If we look at the lower wick, the open price starts at the bottom of the body and ends at the lower price, which is at the end of our candlestick. So obviously the opposite is true for our bearish candle. Your high price would be at the top of your upper wick. Open price would be at the start of the body of the candlestick. Close price at the end of the body of the candlestick. Low price would then be at the bottom of your lower wick. So here's our price action trading approach. Okay, we have the reversal and the breakout. So here's an example. We have price moving within a ascending trend channel. Okay, and we have what's called a morning star formation right at the tip of our at the lower band of our ascending trend channel. Okay, so when this morning star formation starts, we are expecting a reversal to continue within the ascending trend channel. You can see that's exactly what happened here. Okay. Next, let's look at the breakout. So we have this area here, this resistance area, which is with one swing high, swing low, and a couple of swing highs. So basically, when there are bulls and bears that respect that area, or there are swing lows and swing highs that respect that area, it's basically called an overlap level. And this is a very strong resistance area where we are expecting price to break through. Okay, and you can see exactly that's what happened here as well. Okay, and how do we know that price is going to break through? Basically from, again, the formation of your candlesticks. Here we have what's called the three white soldiers. So there are many formations of candlesticks out there. So if you just Google, there will be many templates that you can take a look at. So you don't really have to remember off the top of your head the different shapes or formations of these candlesticks. Just as long as you are comfortable using a couple of them, you can always refer to Google for any templates or any guidelines on the different shapes for candlesticks. Okay. Okay, so moving on, we can see after this three white soldiers, price broke out really strongly and rose above our resistance area. Okay. So before we get started and we dive into the different candlestick patterns, this is basically what price action is. So it's basically the movement of a security's price. In this case, would be Forex, plotted over time. So that's why we are looking at specific candlestick patterns or which tell us the price movements without relying on the different indicators or even algorithms. So it's all about understanding the market's natural behavior. Okay. And then we'll show you at the end how to combine these natural market's natural behavior, which is standard price action, how we combine that with our indicators so that we get a greater understanding of the direction of price. Okay, so let's get started. So we're going to start off with the three single candlestick patterns. We have the hammer and the hanging man, which are just opposite of each other. Okay, secondly, we have the inverted hammer and the shooting star. Again, these are just the opposite of each other. You can see the difference in the shapes. So the upper wick would be a lot smaller on a bullish or a hammer. And your lower wick would be a lot longer, whereas for your hanging man, we're looking at a bearish candlestick, but looking at the same shape. So again, this is a bullish candlestick, this is a bearish candlestick. If we look at an inverted hammer and a shooting star, again, you see the shape of the candlesticks are exactly the same. Here, we don't really have a lower wick that we're looking at, which is mainly the body of the candlestick as well as the upper wick. So for both of these, this is a bullish candlestick, that's why it's green, and a bearish candlestick, but exactly the same pattern. Okay, and next we have the dragonfly doji and the greystone doji. Okay, so again, we can see price moving or rather these candlestick patterns are exactly the same. It's just that in this case, we are looking at a bullish candlestick pattern, and over here, we're looking at a bearish candlestick pattern. Okay, next, let's look at the top two double candlestick patterns. Okay, so here we have bullish engulfing and bearish engulfing. So again, like we mentioned earlier, we have the exact kind of same pattern, just that one is moving upwards and one is moving downwards, since it is bearish. Okay. Okay, so let's move on. Here we have the second double candlestick pattern. So for this one, we are looking at tweezer bottoms and tweezer tops. Again, the candlestick patterns are exactly the same. And it's just that we are looking at the price looking at a reversal from down to an up trend, and on our tweezer tops we're looking at a reversal from the uptrend to a downtrend. Okay, next we're looking at our top three triple candlestick patterns. Here we have our morning star and evening star. So our morning star is kind of a signal that price is going to reverse again, similar to our engulfing pattern. If I go back, rather similar to our tweezer bottoms, you can see when we are able to spot a morning star, price is reversing in its trend. Evening star, similarly, it's also reversing in its trend by giving us a bearish direction instead. Okay, so for the morning star, it's typically occurs at the end of a downtrend. That's why we say it's a reversal. So the first candle, which is this red one, it's a long bearish candle, which indicates a strong downtrend. Okay, whereas our second candle tends to be a smaller shape, can be bullish or bearish actually, that gapes down and it shows indecision in the market. So this can be your doji or even a spinning top that we talked about earlier. Then your third candle, which is this green one here, would be a long bullish candle that closes well into the body of the first candle, signaling a reversal. So the pattern is actually more reliable when this third candle here, when it closes above the midpoint of the first candle. So you can see the midpoint will be somewhere around here. So if it closes somewhere around here, that's a good sign that price is going to continue in the uptrend. Okay, so obviously the opposite is true. For an evening star, we have a long bullish candle here, indicating a strong uptrend. Then we have that same doji candlestick here, showing indecision in the market. And then the last candlestick is basically a long bearish candlestick that closes well into the body of the first candlestick, which we see the same thing happening here. Okay, let's move on. Okay, so next we have the three inside up and inside down. Here we have a opening candle, which is a bearish candlestick, and followed by a green bullish candlestick, which is much smaller. And the opposite is true for a three inside down. Okay, so again, these are indicators of potential market reversals. That's why for our inside up, we can see a downtrend reversing up into an uptrend. For our three inside down, we see an uptrend turning into a downtrend. So for three inside up, we would see a first candle giving us a long bearish candle, indicating a strong downtrend, and then followed by a smaller bullish candle that is completely contained within the body of that first candlestick. That's why you see it completely within this area here. Third candle would be a long bullish candle that closes above the high of the first. Okay, so that confirms your reversal into an uptrend. Okay, opposite is true again for your three inside down. So starting off, we have a long bullish candle, which indicates an uptrend, strong uptrend, and a smaller bearish candle here that's completely contained within the body again, confirming. And then lastly, the long bearish candle closing below the first candle, confirming the reversal. Okay, we have a question here. What time frame do you see good setup for signal? Okay, so the time frames that we normally would use for these candlestick patterns is completely up to you actually. Um, we just normally like to do our analysis on swing trading. So that will be like your medium term trading, we're looking at 4 hour to your daily charts. You can also go down to your shorter term trading if you are a day trader, or your intraday trading, which would be about 30 minutes to 1 hour. We typically won't recommend you to go below 15 minutes just because it tends to get a little bit too noisy on those shorter time frames. Um, but yeah, especially for candlestick patterns, it doesn't really matter which time frames you use. Just yeah, those are just the ones that we normally like to use. Would be 4 hours daily, 1 hour. Yeah, but the lowest we will go is 30 minutes. Okay, it will probably be easier for you to catch these reversals for candlestick patterns on a shorter time frame as well, because patterns on the shorter time frame, so like your 30-minute and 1 hour charts, can kind of provide you multiple trading opportunities throughout the day if you are looking at intraday trading. So those might be better for candlestick patterns. Okay, so now let's look at combining candlestick patterns with what we already know. Okay, we're going to start off with support and resistance, followed by our trend lines, oscillator indicators, and momentum indicators. Okay, let's get started. So, again, if you guys have any other questions, feel free to let me know in the chat. Okay, so support and resistance is basically the price at which an asset's price tends to stop falling, which would be your support level, or stop rising, which would be your resistance. So you would identify these levels using technical analysis tools such as your trend lines, moving averages, and chart patterns. And these would be your swing highs or your swing lows. Okay, so here's an example. This is just a really quick recap on your support and resistance so that we can kind of go through how to identify these levels with your candlestick patterns. Okay, so here in this chart, I have drawn out our swing highs and lows for you to look out for. The swing low would of course be your first support, and your first resistance is basically the level that is closer, the swing high that's closer to where price is currently at. Okay, next. So here's an example of an insignificant swing. So these levels are bad to use for your for Fibonacci points. Here we're talking about Fibonacci, but they are bad to use for any kind of resistance or support levels that you're looking at. Okay. Yeah, here's another example of insignificant swings. Okay, so you can see there aren't really any clear patterns here. No real swing highs or swing lows. Okay, and here is an example of significant swings. So there is a very clear move up and down with obvious peaks and troughs and a very clear market movement. So these are really good levels to use for your support and resistance. And they're easier to spot for your candlestick patterns as well. Okay, someone asked, what's the need of learning candlestick types and what roles do they play in trading? So they actually play a pretty significant role. Firstly would be each candlestick kind of encapsulates a lot of information about the price action within a given time period. So like we went through at the start about the anatomy of your candlestick, it includes the opening, the closing prices, the high and the low. So it tells you what the sentiment of the market is as well. So for example, a long bullish candlestick would suggest a strong buying interest, while a long bearish candlestick would then suggest stronger selling interest. So that would probably be more useful on your shorter time frame. Again, most of these, I can't tell you whether it's useful for you as a trader, because everybody has different strategies and trading techniques. But yeah, it is still important to know the different patterns. Okay, because like we went through the different types of candlestick patterns or the top ones to use, those can help you to identify the beginning or the continuation or reversal, so on and so forth, or the ending of trends, example. So like I think just now we went through a bullish engulfing pattern. So that would indicate the end of a downtrend and it might indicate a reversal to an uptrend. So that allows you to predict future price movements based on your historical data as well. Okay, so yeah, so all of the webinars that we have, like, and all of the tools and strategies that we give you might not be applicable for you personally as a trader, but it helps to have multiple tools so that you can confirm your indicators, by using your trend lines, all of these support and resistance levels as well. It just basically helps to confirm your analysis. Oh, and another important thing would probably be that the candlestick patterns can help you to determine your optimal entry and exit points as well. So that's why we're going through this resistance and support recap as well. So that because resistance and support levels are often really good levels to use for your entry and exit points. So these candlestick patterns further help you to determine even better points as well, especially if on these support and resistance levels, you can spot a candlestick pattern there, then it further confirms your analysis. Okay, we have another question. Let me see. On a bearish setup, is there any white soldier candlestick which will indicate that there's possibility for support breakout? Um, the three white soldiers typically refers to a bullish setup. On a in the bearish context, okay, maybe let's go back to my slides. I can't really remember the patterns off the top of my head as well. Um, yeah, so for bearish, we would be looking at the three black crows for a bearish setup. Okay, I hope that answers your question. So these are just basically three consecutive long body bearish candlesticks with progressively lower closes, indicating a stronger bearish sentiment. Okay, so the opposite of a three white soldier candlestick pattern. Okay, so for example, once you're able to spot this pattern, you might want to use your momentum indicators like your RSI or MACD, for example, which show you if they show you a bearish divergence or moving into oversold territory, that can signal weakening bullish momentum and potential for a support breakout. Okay, okay. Let me get back to my slides. But yeah, let me know if you guys have any other questions. So here's an example of significant swings. Very clear market movement here. And support and resistance. So these levels, as I mentioned earlier, are used as your take profit, stop loss levels, entry, exit, so on and so forth. But an important thing to note is to make sure that your swing highs and lows, there are multiple swing highs and lows that line up together so that it strengthens your entry and exit levels. Okay, so there are at least two swing high or low levels that line up nicely. It's a much better level to use. So that's why we want to try and find levels where these might line up. So it doesn't have to be exactly at the same level as long as it's near, that's good enough. Okay, so let's look at how to pick your starting point for your support and resistance and your entry exit levels. So when picking the starting point of pivot, entry, support, resistance levels, there are a couple of rules. Firstly is to check if there's a swing high or low, pullback or overlap level to start from. Next is to go back as far as possible without intersecting too many bodies of candlesticks. Okay, so we have some swing highs here, where the price, or rather where the resistance level cuts the wick of the candlesticks. That's fine. Over here, it's kind of cutting the bodies a little bit, so that's not too preferred, but that's fine as well. So some more examples here. Okay, you can see when it cuts through nicely just one body of the candlestick, that's fine. This is something that we want to avoid because it's cutting too many bodies of candlesticks. Okay, we just want clean cuts of just the wick. Okay, here's another example. Take note of this red highlighted area because we want to avoid intersecting so many candlesticks. Okay. Okay, now let's look at the pullback and the overlap. So I did kind of mention the overlap earlier, but a pullback support is basically before an overlap occurs. So it's a strong level of support and resistance, and it breaks out from the previous resistance level, and price is now dropping back to visit it again. So when a pullback support level lines up with a Fibonacci level, it's very powerful. And these levels are also made powerful when you are able to spot a candlestick pattern as well. So this works well when it breaks a significant swing low and then starts pulling back to it. It's even better if there are multiple Fibonacci levels that line up with it. Okay, so now let's look at the pullback resistance. We have some swing lows here. Okay, we have three swing lows here and price is breaking below the swing lows. And we're looking at it, we're expecting it to hit towards that same level and reverse off of it. Okay, that's exactly what a pullback resistance is. Now for pullback support, we're looking at a resistance. So here we have three swing highs, making it a pretty strong resistance level. And then price has broken out of the swing high resistance. Okay, so it's broken out of it, surpassed it, and now we're expecting it to reverse back to that same level. Okay. Okay, I'm just gonna. Okay, so now let's combine our pullback and overlap levels. Okay, I already mentioned the pullback support earlier, so let's talk about our overlap levels now. So an overlap level, like I mentioned earlier, is basically when price comes back to it like this, um, and it actually reverses off of it. So when we have a swing high and a swing low that line up nicely, that's an overlap. Okay, so here we have a big swing high resistance here. The moment price surpasses the swing high resistance, it becomes a pullback support. Okay, and once we see price pullback to that pullback support level and bounces off of it perfectly, that then becomes an overlap support. Okay, here's another example. We have a couple of swing highs here. Okay, and price breaks out of the swing high resistance and pulls back to it. So once price breaks out of it, it becomes a pullback support. Once price pulls back to it and bounces off of it, then it becomes an overlap level. And once price bounces off of it again, it now becomes an overlap support. Okay. Okay, another example. So here there are multiple swing lows in line at the 33420 level. And once price breaks this level, it then becomes a pullback resistance. We can see price has tested this level 3 times, making it a strong overlap resistance level. And we can see price surpassed this level again to become a pullback support. Lastly, it tested this level and bounced off of it, becoming an overlap support. Okay, so now let's combine all of these with our trend lines and price action. So here's what a trend line is. Just to recap, as it's a valid trend line if there are at least 3 touches on it. So we have 1 swing high, 2 swing high, and 4 swing highs here. Okay. Here we have price moving within an ascending trend channel with multiple swing highs again and swing lows. So what makes it a valid trend channel is if there are 2 touches, minimum 2 touches on top. Here, of course, we have 3. And at the bottom we also have 3, but at least 2 touches on top and below, that's good enough. Okay. So here we have price moving below or bouncing off our Ichimoku cloud. And here we have a swing low support, price breaking out of it, and we are expecting price to continue to bounce off of it. Okay. Okay, are there any other questions? Okay, if not, there was a question about the which I think there was a question about the time frame. So let's briefly go through that as well. Okay. I just wanted to talk about which time frame to use. Just really quickly. So here's an example of price. You can see it's kind of messy. There isn't really a very clear market structure. And this is on our M15 chart. Okay, now if we change that and we look at it on an H1 view, the exact same chart, just on a different time frame, you can see the market structure is a lot clearer. Okay, so the thing to learn here is that at the very basics, the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, so it doesn't really matter which time frame you use because that's very dependent on your own lifestyle and your own trading methods. But yeah, as long as you make sure that your market structure is clear, that's fine. Okay, so yeah, so typically traders will choose at least 2 time frames, such as your short-term time frame and longer-term time frame. So like I mentioned, we don't go below 15 minutes because it's kind of how can I set YouTube? Okay, so let me get into that in a bit. But basically we don't go below 15 minutes because the charts tend to be a little bit too messy on those time frames. So your short-term time frame is used to identify the most recent trends and price movements, which is why again just now I mentioned that we if you look at your price action, so like your candlestick patterns, those tend to work better on shorter time frames. So like your 30-minute and 1 hour time frames, maybe even 4 hours. Okay, but your longer term time frames will be used to identify the overall trend and market direction. And again, we will use all of those together with key support and resistance levels, trends, patterns, indicators. Okay, so what we look out for on the higher time frames will be key graphical levels. This horizontal levels that we're talking about are those that we just went through. So your support, resistance, pullbacks, overlaps, all of those. Trend lines, trend channels that we also just went through. Some breakouts, big moving averages. These big moving averages and Ichimoku, those are your indicators that you would use after doing all of this technical analysis. Big Fibonacci levels, those are those we cover more in depth in our Fibonacci series. And lastly would be your price action, especially the prior bar. So this is what we're talking about today, what I was talking about with the candlesticks and all of that. Okay, let me just answer some of the questions now. Um, okay, I can show you how to set up Ichimoku in a little bit. What is a 3 super trend indicator? And does it work on MT4? So the super trend indicator strategy, this kind of um not really related to today's topic, but it's basically it follows the trend, obviously, and it's based on the ATR and closing price. So ATR is your average true range, and it helps to determine the trend of the market. So of course, there's an uptrend when the price is above your super trend line, and downtrend when the price is below the super trend line. Does it work on MT4? I'm not super sure. I don't think the mobile app supports custom indicators like that. But I'm not too sure. Maybe it works on the desktop instead. Um, yeah, maybe you can check on that. Because I think super trend indicators are custom indicator and your MT4 mobile app cannot set up custom indicators if I remember correctly. Okay, setting up Ichimoku on your phone or laptop. I can show you how to do it on TradingView. Let me just open my TradingView. Okay, so if this is just a random chart that I have open, if you click on these indicators, and search up Ichimoku Cloud, okay, yeah, it show up like that. It might not show up like this actually. Let me Okay, so this is your Ichimoku Cloud. Okay, and basically you just click on indicators, search up Ichimoku, and this is what it'll look like. click on settings, and there's actually a lot of different lines when it comes to Ichimoku. I'm not going to go through in depth what they each represent now, but I'll tell you that we normally just look at the cloud. Okay, so we normally just look at the plot's background. If price is moving above the cloud, it's a bullish signal. If price is moving below the cloud, it's a bearish signal. So that's one of the quickest ways to use Ichimoku. Yeah, so this is on TradingView, which you can use on your phone or laptop as well. So for Fibonacci, which I didn't really have time to talk about in depth today, but I did kind of mention it in our price action. So you can take a look at this website. It's just it's a free website to use. It's just the forexarmy.com. You can look at some free videos that we have on YouTube on retracements, extensions, some guidelines. Yeah, so what are the different levels that we use, how to use them, how to draw it so that it's valid, how to avoid invalid levels, negative levels as well. Because we use 4 different techniques when it comes to Fibonacci. So stay tuned for our Fibonacci webinar series. It's a 4-part series, and we go really in depth into each of the Fibonacci techniques as well as different examples. But in the meantime, you can take a look at this as well, in case you were curious, since I did mention them a couple of times in today's webinar. Yeah, I think that's it for today. Yeah, let me know if you guys have any other questions. If not, that's all for today's session. Thank you guys so much for joining me. I hope you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.
In progress.
Okay, hi everyone, welcome to today's webinar. So for today's session, we are going to be talking about price action. We're going to give about 1 more minute to let more people join the session before we get started. So in the meantime, let me know in the chat if you guys can see me and hear me, and can see my slides as well. And then we'll begin in about 1 more minute. Thanks, everyone.